Hello and welcome to My Finance Teacher. Let's talk about gold today and some of the most interesting precious metals juniors. So looking at the gold price chart, as I have been warning over the last several weeks, we have reached that intermediate cycle top sometime into mid-October, close to 4,400 on the gold price. Since then, declining down into this intermediate cycle low. So far, over the last month or so, gold has been range bound between 3,900 and 4,400, and the main question going into the future is whether we have seen the intermediate cycle ending right here at the very end of October. And based on the answer to that question, there are a couple of scenarios I see on gold price going into the future over the next several months. If we have seen the intermediate cycle already finished in the end of October with a very modest decline from 4,400 into 3,900 over only about half a month's duration, then in that case the general trend is going to be upwards within this new intermediate cycle. To be honest, this is not my primary scenario. I would give this perhaps up to 45% chance or so, as the decline has been somewhat modest, even after such a strong rally all the way from $3,000 basically, or 3,200 into 4,400. We probably need more time to digest these gains and perhaps a stronger correction down to a more scary intermediate cycle low to give us that significant push higher into a new cycle. So a more likely scenario, at least in my opinion, is a continuation down into this intermediate cycle low. Usually these intermediate cycle lows are sort of confirmed by at least a lower low. So if we break this 3,900 within this next decline over the next perhaps a couple of weeks, or perhaps over the next several weeks, especially breaking down below the 50-day moving average and poking especially a couple of times or multiple times below these relatively wide Bollinger Bands, all of those would be somewhat informative signs of an intermediate cycle low. So I would give this scenario perhaps a 55% chance of a continued downward decline in gold price over short term before we again push into a new intermediate cycle rally. Whether we are going to break 4,400 again within that next push, time will tell. And looking at the cycle duration, again, one of those scenarios, the 45% chance scenario, is that we have seen the intermediate cycle low at the end of October. That would give us a rather short cycle lasting for 166 days. The average cycle duration going back for years is about half a year or so, but over the last 1 or 2 years, since at least late 2023, the average duration has been somewhat short, so we probably do need a bit of a longer cycle to bring us back towards that typical duration of half a year or so. So with the ongoing cycle perhaps stretching somewhere into 200-day long or so, waiting for that push below the 50-day moving average, below the wide Bollinger Bands, that wouldn't be out of the question. That would actually align well with the history, again, as I mentioned, bringing that average duration back towards that typical of around half a year. Next, let's have a look at market sentiment. The blue line here shows market sentiment in the form of Gold Optimism Index, optics. Along these intermediate cycles that last usually for about half a year or so, we have longer term cycles as well. Gold cycling between, say, hard times and good times. Hard times as in, say, second half of 2022, when the intermediate cycle lows are accompanied with the market sentiment dropping all the way down below the level of 30. Good times as in, say, since the middle of 2024, where even the intermediate cycle lows, when gold price is correcting for weeks on end, market sentiment still doesn't drop significantly. During these good times, intermediate cycles are accompanied with market sentiment dropping only down to the level of 60s or perhaps 50s. Most recently though, back into that late October, market sentiment has only dropped down to around 72. It didn't even break below the level of 70. So that's yet another reason why I think this scenario of a continued weakness over the next short term, over the next few weeks, is more likely. So while we are waiting for that intermediate cycle low, while we are waiting for the time to start reaccumulating your positions in some of those precious metals related assets, let's have a quick look at what's going with some of the most interesting juniors, which, by the way, we discuss in great detail at myfinancesteacher.org. So let me present you a handful of the most interesting charts, starting with dilution versus initial firm size going back to the middle of 2022. The dilution since then, that's the percentage change in the shares outstanding, is on the vertical axis, and the initial firm size back in middle of 2022 is on the horizontal axis. What we are trying to learn from this chart is whether dilution does relate or correlate or depend in any way on the firm size, while the correlation is rather weak, especially if you exclude this outlier of Integra over here. While the correlation is quite weak, it's still somewhat of a negative trend line here, meaning that larger market caps usually experience a smaller increase in the number of shares outstanding. So going into the future, looking at current market caps, this is based on the initial market cap in the middle of 2022. Perhaps there is a reason in looking at slightly larger juniors. These are all still juniors, but looking at juniors with 200, 300 plus million market cap might be somewhat correlated with lower dilution. Dilution is not everything though. We probably are more interested in actual share price performance on the vertical axis, to eliminate some of the short-term fluctuations instead of the actual share price. I'm looking at the 10-day moving average back in mid-2022 versus current 10-day moving average that's in the middle of November this year. And we're looking at the percentage change between those over the last 3 years or more. On the horizontal axis, again, we have firm size in market cap back from middle of 2022 in the millions of dollars. And what do we see on this chart here? Except for these two outliers of Montage and Snowline, there isn't much difference between larger cap juniors and the micro cap juniors. Both larger cap and micro cap juniors, excluding those outliers, have their performance ranging anywhere from negative to just over 400%. Hence, you can't simply rely on the market cap itself trying to catch some of the better performing juniors. You really have to dig into the details, trying to find some of those juniors with outstanding management, as in the example of these two couple of outliers here, which, by the way, we have again discussed in great detail with the members at myfinancesteacher.org quite a while ago, giving us a few X's of happy returns. Next on this chart, we're looking at price growth versus dilution. Again, instead of price, we're looking at the 10-day moving average, the values of that 10-day moving average between the middle of 2022 and the current numbers for November 2025. And on the horizontal axis, we have dilution, percentage change in the shares outstanding. What we are looking here is not much of a correlation. Instead, we're categorizing a lot of these juniors into a couple of categories. Those that have strong performance accompanied with a relatively low dilution, that would be top left part of this chart. If you imagine a bit of a 45-degree line here going through the chart, the top left side of the chart are the names that might actually be interesting to you. The bottom right part of the chart, those are the juniors with a higher amount of dilution accompanied with weaker price performance. Of course, there is quite a bit of nuance to this data as well. For example, looking at this outlier of Integra, here is Integra on your chart. Yes, the price performance since the middle of 2022 isn't significant. We only have a few percentage points gains since then, but over the last couple of years, Integra has done outstandingly well. Zooming out a little, we see that one of the main difficulties is that Integra from 2021 into late 2022 and early 2023 has dropped significantly. The thing is, a lot of those juniors have experienced a very similar share price declines from 2021 into 2022. That was relatively hard times in precious metals overall. So again, while we can learn something from these charts about these some of the most promising juniors, there is still a lot of nuance to look at. For that nuance, join us at myfinanceteacher.org. And lastly, a similar chart, again, price performance on the vertical axis versus the dilution on the horizontal axis, encompassing a third dimension as well, the coloring, with blue showing small market caps, orange showing medium-sized market caps, and green showing larger juniors. We see from this chart that, again, you probably would have been better with the tickers that are to the top left side of the chart rather than with the tickers that are to the top right part of the chart, at least going back 3 years into 2022. Again, most recently, we have a strong upward trend in precious metals overall, so the situation, again, requires an updated view. And of course, for our regular updates with a lot more detail, make sure to join us at myfinanceteacher.org. Have a wonderful weekend. Bye-bye.